Today we are going over key time frame levels. These are so effective in the markets across all time frames and across all pairs, yet insanely simple to understand and insanely simple to mark out. So just make sure you're paying attention and you get everything down, and you will probably have this down after this video. So all we're looking at is recent weekly opens, or whatever time frame we're on. We're looking at the opens of the recent candles, but we're also looking at the opens of prior candles. We're going to go into a lot of examples to show you exactly how well this works in the market. But first, let's just go over this current candlestick right here. Just quick brief review. We know that this is a green candlestick, so the open is going to be lower than where it closed. So this is going to be our weekly open. Now, you want to be marking out, in my opinion, these 5 things at all times, and these current ones. So we have the daily open, we have the weekly open, we have the monthly open, we have the quarterly open, and we have the yearly open. At all times on your charts, in my opinion, you want to have these opens always marked without, you just always want to mark these out. And how do we do it? Well, you can go on the time frame, look at the most current candle, and map out the open with just a horizontal ray like so. But these are going to be your key 5 ones. You can also mark out other opens, but these are going to be the most effective from what I have seen and the most simple to understand, and you'll have plenty of levels to trade off of. So, we're on the weekly time frame and we have the weekly open marked out. So what can this tell us? Well, the weekly open is a very key area where price might want to react, either bouncing or rejecting, before continuing in a direction. So we can use this as a line that we mark out on the weekly time frame, and then we can scale down to the lower time frame and then potentially formulate a trade off of this. So that's the first thing you want to understand. We're going to mark out the opens of all of these time frames. We'll go ahead and do this on Bitcoin in a second. But then we're also going to go over the prior candles, so prior daily candles, prior weekly candles, prior monthly candles, prior quarterly candles, and prior yearly candles. All of those prior opens are still valid and still very key to understanding where price might want to bounce, especially the quarterly ones recently on crypto. So, for example, let's just say this is going to be the weekly open of last week, and now we have a new weekly candle right here. Just say boom, little wicks like so, and obviously this is going to be our weekly open now, but this weekly level right here is still very key within the markets, and we can just mark this out as a weekly level. So I just like to literally mark it out on my chart and write weekly, whereas this is going to be our weekly open. So we're also looking at prior levels to understand where price might want to go. Just keep that in mind. That's pretty much it for how we mark these out and which time frames that you want to mark them out, at least while you're starting. So daily, weekly, monthly, quarterly, yearly. Now let's just get right into it. Let's mark out all 5 of those on the current time frame, or the current openings on Bitcoin. So first, let's mark out the yearly open. We go on the 12-month chart, find this year's open, so the 2025 open. We're actually about to close the year this month, but yeah. So there is the 2025 open. Oh, dude, I need to zoom in more. Okay. So yeah, you mark out the 2025 open, and we can scale down then to the monthly time frame, or we can even scale down to the weekly time frame, and we can see that this was a key area of support and resistance for Bitcoin. We are currently trading into the yearly open, so we can expect price to potentially stall or push through it, depending on what our view is and what price action is doing. But that's how you mark out the yearly open. Then we can mark out the quarterly open, which is going to be the 3 months. There's 12 months in a year, 1/4 of it, 3 months. Pretty simple. Okay, quarterly open like so. Then we're going to go onto the monthly time frame and mark out the monthly open. This is what you guys should be doing on every single chart at all times, in my opinion. These are the only levels that I keep on my charts at all times. Monthly open, then let's scale down to the weekly time frame. Boom. And then let's scale down to the daily time frame and mark that. I should be labeling these, by the way. Daily open. Oh goodness, this was the yearly open. Monthly open, and then Okay, so now that you have all 5 of these levels marked out on the chart, you might ask, what do these tell us? Well, these are just going to be very key areas where you might expect price to come within. So let's just first start off with the yearly open. We put in the yearly open and price is bouncing off of it before losing it and then retesting it as resistance right here. Before continuing to the downside, price comes up to the yearly open, stalls a bit before moving to the upside. What does the quarterly open show us? Well, we can see that the quarterly open, price impulse really high above it. We inverted this, making an inverse fair value gap over the quarterly open, and then price came up, swept this high, and then puked from the quarterly open. We lose the yearly open, and then we start trading lower, and then now we started to trade within the to the yearly open. And then if we scale down on even lower time frames, this month is very new, so we don't really have too much to go off of, but we can see that the monthly open was an area of key SR right here. Same thing for the weekly open, and the daily open also acts as a good area of SR. You can see that it really hasn't been tested too much because price just puked below it and then came strongly above it. But that's pretty much what you want to be marking out on your charts at all times. So you want to mark the current opens of pretty much all of those time frames. But then I also talked about the prior levels. So let's just take a look at how all of these key prior levels are amazing to trade off of in the market. We're just going to start in the quarterly because Bitcoin has been going up only for years on years. So a lot of the yearly levels are not going to be tapped. So let's mark out this year's quarterly opens. So we can go ahead and mark out each quarterly open. We had this current one right here. I'll just mark them with the quarter. So we have the Q4 open here. We have the Q3 open right here. Boom, boom. Q3. We have our Q4 or Q2 open. Q2. And then we have our Q1 open. And hope you understand that Q1 open is the yearly open because it's going to be the first day of the year. Okay, so now we can zoom out to like the 3-day time frame, and we can see that not only, hold on, let me make my camera thing a little smaller. So not only are we respecting off of the current quarterly open, but once we open a new quarterly candle, that doesn't mean that the prior quarterly levels are going to be invalidated. So we can see that the Q2 quarterly level right here at about 82,500 was never really tested until Q4, this current quarter. But we can see that when price came into this Q2 open right here, it provided a very strong wick. We can see this huge wick right here and price recovering back up to the Q1 open. And we can see that the Q1 open is the same thing as the yearly open. So we had nice support right here before coming down and using this as resistance on this retest. And then we stalled a bit before coming higher. Okay, and then this Q3 open, look how amazing this was. We put in the open here and we come down to the Q3 open right here, use it as very good support, and then we bounce off it again before ultimately having a strong impulse move down. What do we do on this wick? We retest the Q3 open exactly before puking down. Q4 open, look at this. We literally just come above it, come below it, and then we retest it, puking. So we can see how this provided as great areas of support and resistance within the market, and we can see that even the prior levels are still holding very strongly. Now, once these get tapped, so before this wick right here, the Q2 level was untapped. Now that we've had a tap of the Q2 level, it's going to be a little bit weaker. Not saying that if we come back down to it though, we can't bounce, but you just want to always play, or you're probably going to get the highest probability off of the first tap. So once I saw that price lost the yearly open here with these candles, we could expect price to revisit the Q2 open or some other key levels that we had marked out on the chart. So now let's just go into another pair so that you guys see that this works on all time frames. Here I have the past 4 quarterly opens marked out on Ethereum. Let's just go over it one more time so you guys are very familiar with this. but we have the current one. I'll label it again right here. So we have Q1, we have Q2, Q3 actually. I should mark this out wrong. Q4, Q2, Q1. Okay, so we have all 4 quarters marked out over here on Ethereum, and let's look how price respected these zones. So the Q2 level still untapped, Q3 level still untapped. So these are very valid areas where we can potentially target in this downtrend for Ethereum to potentially bottom. Maybe we come into the Q3 zone or the Q2 zone. But just look out for these because these will probably provide as strong areas where ETH might want to bounce. This also has a nice little order block over here. So this might be an actual pretty solid area where Ethereum might want to bounce. And we can see that we had a wick above the Q1 open, and then now we are trading below it. So it's a little bit bearish on ETH. And this is the yearly open, same thing. But we can see that price rejected off of it, big move to the downside, push above it, a little retest, and then move higher. We can see that the Q4 open as well provided an amazing rejection on ETH. We open the quarter right here, strong move above it, big fake out, big move down. We come up, retest it, chop around. We do not sweep this high, whereas on Bitcoin, I'm pretty sure we did sweep it. So this is extra weakness. We'll go into divergences in another video. We reject off it, providing a big move down. And we did have a little bounce at the yearly open right here, or the Q1 open, but then we ultimately lost it, and now we are rejecting off it again. So we can see that the current opens on these given time frames are very, very well respected, but also the prior opens are very, very well respected and very, very key levels that we can start to mark out. Let's go over here on Solana as well and look at these quarterly opens that I have marked out and see how they provided as very key SR levels. So these are just all quarterly opens. It doesn't really matter which quarter or whatever, but we can see that, boom, support, 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 resistance, resistance, support right here, support, and then we ultimately lost it, boom. And then we can see that same thing here, had a big move to the upside, big moves to the downside, reject off of this quarterly level before moving to the downside. So we can see that all of these quarterly levels are providing amazing areas where price might want to reject or bounce. Let's also mark out some monthly levels because this works on pretty much all 5 of those time frames that I was talking about. So we can mark out this previous month open here, this previous month open here, this previous month open here, and this previous month open here. So as you can see that both of these previous month levels are untapped still. Price has not came up and tapped these. So when price does, you could expect these areas to slow it down a little bit. So now let's zoom out to the daily candle and see these monthly levels. So we can see that, look, this monthly level provided as a very key area of support and resistance. Very key actually, same with this monthly level right here, same with this monthly level right here, same with this monthly level right here. So pretty much all we learned in this video is that we're going to be marking out on all 5 of those time frames the opens on the current opens, and we can also potentially mark out prior ones. So let's just say Ethereum or Bitcoin or Solana or whatever is having a pretty strong move to the downside. We can zoom out onto these higher time frames like the monthly, like the weekly, quarterly, yearly, and see if there's any prior levels near where price is heading. And if there is, we can mark these out and potentially pair it up with other confluences to take better trades. Same thing for the upside. If price is very strongly moving to the upside, we might have some key monthly, weekly, daily, quarterly, or yearly levels within price, and we can pair that up with pretty much any other confluences that we've learned so far and make our probability of our trades higher. So as you notice, we also have we have swing points as well, but these are just other areas in the market where price wants to react to that potentially might favor our trade. So that's pretty much it for this video. Hopefully you guys understand how to mark this out. It's very straightforward. We're just marking out the opens of current candles and the opens of prior candles and using these levels to trade off of. We're going to go into way more depth on the exact strategy that I use I love to pair this with deviations, which will be a video in the very near future. So go practice this. Find it on all time frames, and you'll see that these levels get respected like an insane amount of the time on crypto, on Forex, on commodities, on absolutely everything. And I'll see you guys in the next video.